It's working. I think we're recording. Alright, we're good. Alright, let's turn this music down. Alright, YouTube, we're back with another banger video, back with another trade. Oh my gosh, this mic setup is terrible. Yo, once I really start getting payouts, I'm gonna get this setup fixed, this whole thing organized. Whole thing gonna be looking fire, alright? So let's get right into it. Okay, first thing that we see, alright, let's go to the day. We're on ES. Hold on, I forgot. Let me do this. Okay, we're on ES, and what do we see here? Listen, guys, I'm tired. It's 9:18. I just got out of bed because I was not gonna lie, I was lazy. I didn't want to record, so I just got out of bed. I was like, I have to do this. I had to, you feel me? Because I didn't want to waste time. So boom, market, right? There's a lot of speculation right now. The market crashing because like the Trump tariffs and stuff like that, but I really do not care. All we're doing is trying to follow the strategy and see how things are moving. So as you can see, pre-market here, we actually were starting to come up pre-market. I was thinking, oh, it was looking pretty bullish. So like I marked out this high around here, and I guess this high right here, you can use this high too. But pretty much, I used this high, and then I seen that price came down. I marked out this fair value gap, seen price come up, so I was like, you know what? Might as well take the long around here. If you've seen this move happen, you might as well take the long. Boom. I don't think I would have taken this trade on a real account though. This was a paper trade, by the way. This is not a real trade. I did not like this was even like a testing trade. This was just an idea that I seen pull up. I seen this, boom. Price came up. This fair value gap down here, boom. All right. Just the only reason why we entered over here, you could low-key enter right here too, is because you want to see price really like, so you want to see price support the fair value gap. You know what I'm saying? Like you want to see price come into it, and then you want to enter once you start seeing the price start to come up a little bit. That's when you want to enter. But yeah, let's go back into the trade that I actually took today, which was on SPA. The reason why I took this on SPA is because for some reason TradingView my futures are like 10 minutes delayed, and that's kind of gay. So yeah, so we're just trading the stock because it's real time, and it's basically the same thing. ES and SPA are the same thing if you guys didn't know. All right, so let's start off with the breaker structure, or let's just liquidity sweep. Actually, now I'm looking at it. So pre-market, I seen this move happen pre-market pretty much. I don't know. Let's go into the 1 minute. Yeah, I think it was on the 1 minute. We might have seen something around here. Yeah, 1 minute. I just seen this. I was like, yo, Loki, this is a liquidity sweep. And now looking back, there is this little area. I guess you could use it as a fair value gap all the way over here. Look at that little line. But yeah, I seen this. I just marked it out. This was just pre-market, charts. There really wasn't nothing. Just mark out the highs. This was really the highs right here. Boom. This is the highs. Now, as you can see, the market did come up, right? The market did come up, but for some reason, I wasn't convinced that it was gonna keep going up. And keep in mind, I was looking at the 1 minute. I was reminding myself too. This is only the 1 minute. So boom, I hop into 5 minute. I'm like, yo, pre-market highs is right here. And when pre-market highs are at the same time as market open, it's kind of like weird to explain this. So I was like, I'm gonna just use the previous day's high, because this is the only next high to go from here, right? This high doesn't really count in my eyes. It doesn't really count because pre-market was just going crazy. So boom, I seen this. I marked out this line all the way over here, and what you actually see, I marked it all over here. I forgot why, but I did that. So as you can see, this is obviously a liquidity sweep. This is obviously a liquidity sweep. We just had to fill out the orders over here. Market came up, boom, starts coming down. Once the market starts coming down, you just look for these fair value gaps. This right here is not a fair value gap, but what it is a demand. So like there's supply and demand candles. Like this candle right here is a good example. Like you see the first green candle before like the market starts shitting, right? So like up here, it would have been this candle right here, the first green candle before the market started shitting, pretty much. And it'd be the opposite. So like down here, the first red candle before the market starts going up. But this is a bad candle, so let's show the example on like try to find something. You probably can't find nothing. So like something, it would look something like this pretty much. You guys get the idea. So boom. This is just I did not take this trade. I just noticed it. Oh yeah, I used it. I used it to like confirm my bias, right? So the market was pretty much around here. The market literally just tapped into this fair value gap, and we're on the 5 minute. But before I even noticed this fair value gap, I noticed that there was this. I noticed that there was a demand block. price came into demand and it started coming back down. I noticed that and I was like, I noticed this and I was like, damn, I should have took the shorts up here. Until I looked and I realized, hold on, we're tapping into this fair value gap. I was like, oh, this is a no-brainer. I'm taking the short. I'm taking this short. Now, guys, keep in mind, I took the short on this candle. Price came in and almost wicked me out my stop loss. I was thinking this was a trade. I was low-key hurt. I was a little bit sad. But, guys, do not be fooled by these wicks. This is how they get you as part of the game, guys. That's why you need a little bit of stopper house room. As you can see, I literally was like 2 ticks probably. A couple of cents off. Again, stopped out this trade. Had to move it up a little bit because I was like, come on, my thought process was like, let's say it did inverse this fair value gap, it's gonna tap into this supply. It's gonna tap into the supply. So I was like, okay, if it taps to the supply, low key boom. But I didn't want to move my stop loss all the way up here. That's just crazy for the risk to reward. So I was like, okay, we're gonna stick to this fair value gap. We're entering based off this fair value gap, but we're using this as like an extra confirmation that okay, yeah, the market's coming down. We had this liquidity sweep. We had this respective supply. Then we had this fair value gap. I'm like, okay, market's definitely going down now. Considering all the news and all the stuff that's going down, I'm like, okay, this is a no-brainer. The market's definitely going down from here. So we take the entry, boom. You would have entered and you just would have printed. If you just kept holding out, as you can see, price, while we're in the position, price made a fair value gap, taps into that second fair value gap and respects it. And what do we see happen? Continues going down. And this just keeps happening, keeps happening, keeps happening, keeps happening. I like to normally go for two to ones, right? But in this scenario, if you were to hold it out, right? Because there's really no point in selling around here. There's really no point. This candle comes and you just sell your position, right? Because the market's just shitting. You might as well just hold it out. You would have held it out down here with 1 to 4 easily. But you know what I'm saying? You take that risk. This would have been an easy 1 to 15, 1 to 16 trade. You start to see how these people can catch 1 to 16 RRs. You know, when I first started, I was like, that is crazy. I wouldn't even try. But a setup like this happening, you hold it out to close. That's a what? 1 of 26. Crazy risk to reward. Not even casinos got that. This is not casino, guys. This is a financial class, guys. This is not casino. Do not gamble with trading. You could lose a lot of money in a short amount of time with that. So, guys, I'm gonna go into yesterday's trade. Pretty sure yes, because this trade I was in school. Yesterday I did not go to school. Yesterday I took the day off, guys. I took the day off. Had to get my hair done. I was looking at charts, but it's like I don't know. I think I forgot to record or it was like some shit. Yesterday I wasn't really like locked in like that. Let's go to the 5 minute. Now I know you see this candle. I don't even think I traded SPY. This was just an idea. I'm pretty sure. Cause I don't think that was an actual trade. How much time we have? We're only 7 minutes in. Yeah, I'm gonna get this vid out. Okay, so yeah, I just seen this happening. I'm pretty sure. I was like, boom, mark. I don't know why, but I just believe that market was coming up. Yeah, I feel like this was a sweep right here. Well, if this was a sweep, we inverse this fair value gap. So I was like, market's definitely coming up. So boom, I'm like, look at the fair value gaps, and I look. You see this tiny little fair value gap in this area right here? I see price come in and then continue going up. So I'm like, entering right here. This is a good setup. One in a lifetime. Look at this tiny fair value gap. So I'll take this entry right here, and you just keep holding it, keep holding it. This is an easy 1 to 20. The market just went absolutely crazy this day, right? You would have went up to here, you would have got a 1 to 30, 1 to 29 right there, right? That's absolutely insane. You would have easily got a 1 to 2, easily, no drawdown, instant 1 to 2 in like 3 minutes. Cause keep in mind this fair value gap is super small, so your risk is super small. By the way, so you can just hold it out to your liking. Some people get nervous and like exit early, just take profit. Profit is profit, bro. You might not be able to hold it out to the exact 1.1 to 29. Right? Unless you have a sniper. Unless you have some type of edge I don't know about. Unless you have that edge, bro. But yeah, that was the trade. I'm going to go to... Let me check the futures because I think I traded futures yesterday instead of SPY. I may be wrong. Nope, I'm not wrong. I'm never wrong. I'm only wrong at the time. Only wrong at the time. Okay, we're on the 1 minute, guys, so the candles might look a little weird. Let me just put it to the 5 minutes so it's a little more simpler. 15 even. Yeah, put it 15. So this is today and this is yesterday, guys. So yesterday, these blue lines represent yesterday's highs and lows in the pre-market. So this was yesterday's high and this was yesterday's low in the pre-market. Boom. This is yesterday's high. So what I do, go to a smaller time frame and see what the charts are talking about. Let's hop into the 1 minute. Let's see if this is a better... If we have a better example of this happening on the 1 minute. No, we don't. Okay, let's just go by the strategy. But you can't go on the 1 minute and like you're gonna see like look at this fair value gap, guys. Notice this fair value gap. Price comes in and respects it and continues to go up. And not just continue to go up, but it's going up in a strong way. Like you see 3 strong candles. This is a very bullish sign, guys. But let's go by the strategy. Let's say you're playing about a book, which we did here in these trades right here. Okay, I remember this day. I remember this day. Let's be quick. How much? 10 minutes. All right, boom. Price came up to here. I thought this was a break of structure. I really thought this was a break of structure, but just off of how this candle moved and the news that was going on, so there was like some fake news about like the tariffs being on pause or some bullshit. So the market started pumping up like crazy, but they found out it was fake, so it started dropping down like crazy too. So I was like, I thought this was a break, but you know this fair value gap, this bullish fair value gap got inversed right here, as you can see. So GG to that fair value gap, but here we have an inverse bearish fair value gap. So this is like a perfect play. Another example of like a perfect play right here. I don't even have to do the full square, but you get the idea. So as you can see, price came into here. Price dropped down, came into this fair value gap. It tried to go up, couldn't. It was just holding this fair value gap. Then boom, I see this fair value gap somewhere break. Like it breaks this little level right here. Now let's hop into the 1 minute. that's what today. That had to be today. Okay, let's hop into the 1 minute. And what do we see on the 1 minute? On the 1 minute, we actually see a fair value gap right here get formed. That's in line with the 5 minute fair value gap. So we see this fair value gap on the 1 minute. Boom, boom, boom. We see this candle come down to here, close below the fair value gap, which is a very bearish sign, a good sign. And you would have just entered right here. Now, looking back at the chart, we might have entered right here. Okay, you might have entered right here. Why? Candle closed below, and it tapped into the fair value gap. This is a good setup right here. But this is why you give the stop loss some breathing room. Because, as you can see, it literally went to the tippity top of the fair value gap. Didn't even go like a little bit above. This time it just went to the tippity top of the fair value gap and continue to drop down. So even if you were to close your position right here, you would have made your money back. Here's why. Because we always go for 1 to 2s. 1 to 2s mean if you risk $100, you're gonna make $200. So if you lose $100 on your first trade, then make $200 on the second trade, you do the math and tell me how much money you made, even though you took a loss. All right? Even though you caused some bullshit, even though you got wicked out because of some bullshit, you still made money on the same exact setup. Why? Because of the strategy and the risk management. This is how you become successful in trading, guys. So boom. And what do we see here? We hit this 1 to 2. Let's say you hit this 1 to 2 and you exit your position. Nice. This is good. But what do we see happen again? A fair value gap forms. And what do we see price do? Respect that fair value gap. So what do? You take the short, go for a 1 to 2 again. Easy money. Guys, this is time and time again. So simple. Now this trade right here, I remember taking this trade. Guys. Here's why. Okay, in the moment, I was already on fire with these trades, right? I was already on fire with these trades. So I was like, you know what? I'm gonna just take another one. This is an example of order trading, but this is what I did, right? So as you can see, this fair value gap price came down into these bottoms. How many times is this now? Price came in here 3 times. Okay, guys, let me try to find a drawing tool. Oh my gosh, bro. There we go, brush. Price came into the bottom these 3 times, the same level. Okay, it came to the same level 3 times. And keep in mind this strong buying pressure. I really thought the market was about to flip bullish after these past days, but I was wrong. Which I can see about a trade. I was obviously wrong, but yeah, I see these market coming to these highs. Why did I take the long? Looking back, I don't know why I took the long. We might have to go to another time frame to understand why I would take the long. Okay, they were still in this 5 minute fair value gap. I just think, oh yeah, probably because I thought like this trade would have had to keep going down, but it didn't, and instead it kept going up. So I was like, market might be flipping, but obviously I was wrong. I don't even know what I was thinking looking back. Looking back is like, bro, why did you even take that trade? There was nothing for you to take that trade for. I probably, I was just on fire. I felt I was on fire, and I got burnt out. That's really what happened. You get burnt out. We was in profit for a brief moment. Let's see the realized risk to reward. How much did we actually risk the 1-to-1? Low key, depending on where my stop loss was, this is a 1-to-1, bro. I probably would have got stop break even, but that's a bad trade. End of the day. Let's look at this next one. Let's see what happens. Okay. Now, what do we see here? Now, I didn't even see this at the time, but I'm looking at it now. Price came into the same exact fair value gap. which is a good sign once again. Now I'm gonna just move that there so you don't get confused. Now boom. And now what do we see here? On the 5 minute, we see a fair value gap come into here, gets tapped in, and starts to break down. I'm like, this is looking very nice. This is very nice. I think, I'm not glued to the charts, by the way, guys. So some of these trades, it's like, bro, why don't you enter here and there? It's like, I'm not glued to the charts. I just hop in the charts when I have the time to, and I entered in these trades, and just hop on the 1 minute, and yeah, we broke these lows right here. We broke these lows. We're pretty much at these lows, so pretty much damn near. So we pretty much break these lows or at these lows, and I'll take this trade here on this candle, and then the rest is history. I kept my stop loss here just because like we had a bad entry, and I was like, bro, if price comes back up in this fair value gap, I don't even want to be in my position no more. Cause think about it, it's nearing the end of the day, so I'm like, bro, if price comes back to this fair value gap, I don't even want to be in the position for shorts, just off how price was moving before. So I was like, I'm just keeping my stop right there instead of keeping my stop above this fair value gap like we normally do. Yeah, guys, this is just part of the game. Some decisions you have to make. Not every step's going to be perfect, right? You're not gonna have the best risk management, but that's just the name of the game. And I always go for one or twos, right? Keep in mind, this is the main reason why I go for one or twos. They're just safer to take overall. Cause let's say I were to target these lows right here at a 1 to 5, I would have gotten stopped out. The price never came to a 1 to 5, but price did come to a 1 to 2, 1 to 2.32 in fact. So it's not even just a regular 1 to 2. You're still getting some extra bread on the side. So yeah, right. Price came in, you hit the 1 to 2, nice. Hit the 1 to 2 twice. So if you really get stopped out right here, you're just greedy, buddy. You're just greedy, buddy. You know. But yeah, that's the end of the trade. How long is it? 16 minutes. Shouldn't be too long. I'm out, guys. I'm low key tired. I feel like I've been talking for so long. Peace.